we go.
Well, good evening, everybody. Hopefully, everybody's doing well and cheering the Blue Jays on.
Yeah, welcome everybody. We're just opening this up now, so we're getting right at 7 here. So let's see if this is working. Everybody that's in so far, can you throw in a chat there if you can hear and see us all right? Make sure that's working okay before we get too far into this here. Awesome. Thank you. Appreciate it, everybody. So, we've done this lots. A lot of them are going to be the same thing, what we usually talk about. But I just want, for the people that have never been on these before, let's utilize the chat as much as we can. That's going to be the biggest thing. Ask as many questions as you want. Throw it in there. Uh, we're gonna have one of us, either myself or Ryan, on here is gonna be watching this. We're gonna be answering as many questions as we can while we go along with this. We are gonna hang out at the end. We're gonna try and wrap this up by 8 o'clock. And then at the end, we're gonna stick around for 15, 20 minutes, however long you guys want, to answer questions that we may have missed or to go over anything with the market. There is a lot to cover, so I am going to go through this at a fairly quick pace. But this is recorded, so you guys will be getting a copy of this recording in an email that I'll send out most likely tomorrow for you guys, just in case you missed something. So don't worry about that. There is a lot to cover, but just so you guys are aware, this is a first-time home buyers class. Okay, we're not going to cover absolutely everything about buying your first home because there's just so much that goes into it, right? We're basically going to be covering the mistakes that people make when they go to buy their home, how we're going to save you money and issues at the start. And this is just how to get you guys started, what the first steps are. So basically financing is a big thing. And then a couple things to watch out for while looking for a house. Okay. We just don't have enough time to cover the entire buying process, and I'll show you why in a little bit here. But this is just to get a start, and then we can kind of take it from there as we go along. So, like Ryan mentioned, welcome everybody. I appreciate you guys having us or being a part of your evening tonight. Hopefully, we're not going to take up too much of your time. And yeah, ask as many questions. So, you're going to see this as well in the chat. This is a booking link. So at any time, whether you want to talk to us more on a one-to-one level, want to talk more about your personal situation, how we can help you either right now or in the future, click that booking link so we can have a one-to-one conversation with you. But I'm going to keep posting that as we go. I'll keep mentioning it so you guys don't forget about it. But that's going to be a big thing to use later on. So let's get into this now. So as I said, appreciate you guys showing up on your Wednesday evening, learning about what you can. In the first message you guys got, yes, I'm going to be giving you guys a complete guide to buying a home book. This is the book here. It's going to come to you guys in that same email with the recording in it. There's also going to be a buyer's guide that are coming at you too. They're all e-versions, so you can read them wherever. But that's just a thank you for being here on your Wednesday evening with us. And we hope you guys are going to get a lot of good information from that and this as well. And so you guys are aware, there is mistakes that is being made when you buy your first home. And what we're going to do is we're going to help you overcome these first mistakes so you can make informed decisions. You can do it right the very first time and not run into any issues. These are typically the six that we run into. So the first three are going to be dealing with financing, and the last three are going to be dealing with some real estate stuff. So these are the things that we're going to cover in detail on what's going to help you avoid issues, save money, not cost you money in the long run, right? So that's what we're here for. That's what we're going to help you with, give you that better understanding. So let's get this chat lively. I know there's a lot of stuff that goes on with the media and and when it comes to the real estate market. So throwing it, I want to hear from you guys because I'm pretty sure most of us on here, if not all of us on here, are going to be first-time home buyers. I want to know how you guys are feeling about it right now. What are your guys' thoughts and feelings? I know we do this a lot. We get a lot of these kind of things, right? I want to hear from you guys. I want to know what we're working with here so that we can help fix it for you guys. Hopefully alleviate some of these things. Maybe we can help you guys, overcome that by the end of this. So let me know what you guys think. I know there's a lot that goes out there, right? I bought my first house and it was not in this market, right? I bought my first house back in 2012, so a lot different. We get a lot of concerned people buying, right? Nervous about what's out there, how easy it is to buy a place, right? And I do get that, right? There's a lot of confusion right? That's a good one. Uncertainty, confusion, those are big ones, right? There's a lot of things that are going out there, but it's definitely there we go. I like that too. Scared to not make a mistake. Exactly. Lots of things can go on with these things, and this is we're going to show you how the buying process can be an easy process and how you can avoid a lot of these mistakes. So I'm glad you guys are feeling that way. We're going to hope to fix that for you guys and make it a super easy process. So before we get into this, I want to make sure you guys know who we are and that we know what we are what we're talking about and that we're qualified to do this. So first and foremost, myself, I am Andy Goddard. I am a realtor. I am the one that deals with buying and selling of the properties in Saskatoon and surrounding areas. I've been a realtor since 2021, so going on 5 years pretty soon. I've built a team now, so that's a team there. We are ANC Realty. We're under Realty One Group. We've helped many satisfied buyers and sellers through the city and surrounding areas. And when I say surrounding areas, I am licensed in all of Saskatchewan, so I literally can go anywhere in the province. However, I kind of stick to Saskatoon and this area because it is where I'm from. I'm from Warman myself. I've been here. I've got married in Warman. I've got 3 kids that we've had in Warman. But I am born and raised in Saskatchewan, so this is my home. I've been here my whole life, and I love helping other people find their home in this province and this city. So that's a bit of who I am. Again, I'm the realtor side of things. And when it comes to buying your first house, majority of us have never made a purchase of this size before, whether it's 200, 300, 400, $500,000. This is going to be one of the most expensive purchases you're going to make in your life. And so most of us don't have the complete full cash to buy a house. Majority of us don't, right? So we do need to have a mortgage. We do need to have somebody that's going to lend us money to buy this. And that's why I've teamed up with one of the best ones I've worked with. I haven't met anybody who works as well with clients as Ryan does. Uh, Honestly, without him, a lot of this doesn't happen. He is so good at what he does. So I'm going to let Ryan introduce himself. He's going to be on the back end a lot of this webinar, answering questions. But he is my finance guy. He's going to be the one to help get you money, essentially. So I'll let Ryan take it away from here.
Oh, well, thank you so much for that amazing introduction, Andy. And I feel absolutely the same going back the other way. Andy and I have been working together a long time. He is definitely the yin to my yang, and this is really a great partnership that we ensure that we kind of cover you through the whole process. So, yeah, Andy's the realtor on the front end, and I am the financing guy on the back. So I have been in the mortgage industry here in Saskatchewan for over 20 years. Actually, almost 23 now. I've covered, a few different hats. I've been on the broker side, I've been on the lender side, and I've also been on the CMHC side. So my background has really given me a really good um, overall appreciation for how deals need to be structured. Certain things are important, certain things that may not be important, even though a client might think so. There's ways to get around certain things, some credit problems if we have them. I've done this a long time and really have really good strategies to make sure that we have good options to get all of our clients into new homes. So I've been with TMG, the mortgage group here. They are the largest brokerage here in Saskatchewan for sure, and overall in Western Canada as well. As Andy mentioned, we do primarily service the Saskatoon area because that's where we're both located, Andy being in Mormon, myself being in Saskatoon. I am born and raised in Saskatoon, so I know the market here very, very well. I know the neighborhoods, I know the types of properties that are here. But know that just because we are located in Saskatoon directly doesn't mean that we can't help you all the way across the province. Both of us are licensed Saskatchewan wide. So don't be afraid, if you do find something that's maybe an acreage outside of the city or in a small town, or even as far as, Prince Albert, Regina, North Battleford, things like that. Andy and I can take care of you all the way across the province. So don't be afraid that wherever you're looking, we can help you out there as well. Little bit about me. So yes, I have been in the mortgage industry for 20 years, but I couldn't do it without the wonderful support of my wife, Michelle. We just celebrated our 30th wedding anniversary. So very, very, very long time. My 2 boys, I guess they're not really boys, they're men now at 30 and 28. and I am going to be a grandfather this year in March. So super excited about that. Yes, absolutely, absolutely thrilled. So know that we're here to help. Know that this is going to be a lot of information going forward, but we're here to walk through you with you the whole way. So reach out, let us be a part of your journey, let us be a part of your team, and help you any way that we can. A couple of things that Andy mentioned just in the housekeeping area. Use the chat function, guys. What we really find is that if you have the courage to ask that question, we've got quite a few people on the webinar tonight. If you have the courage to ask that question, there's probably 5 or 6 other people wondering that same question in the background that might not have that courage. So don't be afraid to throw all those questions in the chat box. Yeah, when I'm talking, Andy will be following that chat, and when he's talking, I'll be following the chat, just to make sure that we can get those answers to you right away and efficiently and quickly. So as soon as you have a question, type it in that chat box and ask away. And the other thing too is that Andy put that booking link in, and I'm going to re-put it in here, just to make sure that every situation that we have is very unique, right? Everybody's income, everybody's down payment, everybody's situation is very, very unique. So as much as the information today might be very high level and general, every situation that you're individually going to be going through is very unique, and we want to make sure that we hear your story, that we know all about your family and your goals and your dreams, and how that best fits in, because each mortgage is going to be individually tailored to you, and each home will be individually tailored to your needs and your family's needs. So book that link. We want to talk to you one-on-one and really kind of dive a little bit deeper down than the information tonight and find out about what helps you best. So without further ado, I will pass it over to Andy, and let's get started and have some fun.
Awesome. Thank you, Ryan. Appreciate that. So that is essentially how it works when you buy your first home. You get somebody to help you find it. You get somebody to help you with the financing. Those are your first initial steps. And so, what are the steps to buying a home? So, I explained earlier that there's just so much that goes into this, and this is probably as condensed as you're going to get. This is essentially the steps from start to finish to buy it, but every step of the way with those, there's just so much that goes into it. A lot of stuff that happens behind the scenes that a lot of times buyers don't know about, but we get it handled for you. That's what makes it so great. But we obviously update you as much as we can with what's going on so you know exactly what is going on. So, I'm going to run through this really quickly, just because to keep on pace here. But the first and most important thing when it comes to buying your first home is getting a pre-approval with Ryan. Get that mortgage pre-approval done. And there's two main reasons why. Number one, it tells us how much you can afford to buy. So it's going to give you a pre-approval with a max amount so we know how much you can afford to buy. So that way we can shop within your range. And number two, it lets the sellers of the property know that you have been pre-approved, which means you've already talked to a mortgage broker. They've already checked into your finances. You are essentially good to go to buy this place. If we go to write an offer without one, there's a good chance they're going to say no because we don't know if you can even buy the place. That's why it's so important, especially when you get into a market like this where it's very competitive. It's very low inventory. We want to have everything in place to get an offer accepted, is what I should say. So once we got that pre-approval and we have that number, we can kind of tailor a search for each person up to that amount, figure out what they want, what they need in a house, what area of the city, what even if they want to be in the city, right? And we kind of figure out their exact specifications and go from there. We start touring houses because there's a big difference between looking at pictures online and physically stepping into the property, because pictures only tell one story. Looking at the property in person is a whole different thing. So important to get in there and take a look. Once we find the right place, though, that's the big thing. We find the right one. That's when we sit down and we write an offer, right? I'll negotiate where we can negotiate. Sometimes when we get into a multiple offer situation, asking for less isn't going to always work. But if there's a room to negotiate money off or things added into the house, we definitely are going to look at that. Once we get an accepted offer where both you and the seller are satisfied with what we've offered, we go into a condition period. That gives us time to finish the financing. That gives us time to do any inspections. So typically a home inspection, review any condo documents that need to be reviewed, things like that. Make sure the house is sound and good for you to continue to purchase, right? So if anything goes wrong in a home inspection or financing or in the condo documents, we can walk away and go find something else. Okay. Once we are satisfied with everything, we remove those conditions and it becomes a firm sale. So that's when the home officially becomes off the market. You are essentially almost the owner. But during that time where you remove conditions and up to possession date, that's where you sign the documents with the lawyer. So it transfers the title into your name. The mortgage gets processed and sent over to the sellers. You set up home insurance, things like that. And then on possession day, we get the keys. We meet at the property. We do a walkthrough, make sure all is good. And then I hand you the keys, and you are now a proud new homeowner. Essentially, that's pretty much all of it in one quick shot. But again, there's so much that goes into it for the searching, the writing the offers, the inspections. So much goes into all that. And our job as realtor and mortgage broker is to make sure you guys know what's going on every step of the way. So there's no guessing, there's no confusion, there's no nothing, right? We show you exactly what goes on and how it works and why it works that way, and off we go. So as Ryan mentioned, the link is in there. If you guys have any questions on the buying process, you want to talk more about the buying process, book a call with us. Wait till the end. We can do some Q&A and go over that stuff. But to keep on pace with everything, we're going to jump into these mistakes I talked about earlier. So like I said, there's 6 mistakes that people make when it comes to buying your home. So the first 3 are financing, and that's going to be the big and major one. Like I mentioned, pre-approval is huge. Again, 2 reasons why. Lets us know how much you can shop for. And it lets the other people know that when we were buying the place that you have been approved by a qualified mortgage professional. That is so big when it comes to writing a competitive offer. Okay. If we don't have a pre-approval, we have no idea if you can even buy the property itself. So there's just a waste of time there. Let's just get that in and get the process started. So how do we get this? What do they typically look for? So Ryan mentioned earlier that it's not black and white. So mortgage approval is not a one size fits all thing. It is so custom tailored to each individual, like he mentioned. However, these 3 things are essentially the building blocks of it and what makes it work, right? So even if you don't think one of these things will work for you, give us a call anyways, right? Let's see if there's ways we can work around it, work with it, whether we can make it happen now or make it happen in a little bit, give you a game plan to get there, right? This is again just a very generalized concept, and we need to talk to you and get your personal information and your personal finances in order to figure out if this is going to work fully or not. So, before you do that, this is the 3 things you need to have ready to go. Number one, in Canada, we need credit is a big thing. So credit score, all that stuff. They want to see the lenders that are lending you money want to see how you do with money you are lent. So credit cards, right? They want to know if you've got any car loans, right? Have you paid those credit cards off? Are there a bunch of maxed out credit cards? Do you have a few loans, student loans? Things like that that you have missed payments on, or do you pay it religiously every month on time and you haven't missed a payment? Do you have a bankruptcy? Do you have debt consolidation on the line, right? Those are the things they want to look for. So when they're going to lend you money, they want to know that you can pay it back and you've got good habits of paying back money that's borrowed to you. Okay. Um, Basically at the start, 650 for a credit score is usually the minimum they want to see. Anything above that is great. That means your credit's really good. Anything below that, we kind of have to look into alternative lending options, which that's a whole different conversation to have, but that's something that we can talk with you about if that's the case. But as long as you got strong credit, that's a good start. The second thing is income. Income, it's a pretty obvious reason why that's a thing. So you need to make sure that the lenders see that you're making money, how much, so they know how much they can lend you to make sure you're not going to be house poor. So essentially, they should take a percentage of your income and use that, right? They don't want to give 100% of your income because then all your money is going to go towards the mortgage and you have no money for gas, bills, food, things like that. So, for typically for everybody, they want to see 2 years worth of income tax statements. Now, the reason I say typically is because if there's anybody who's new to Canada and haven't been here for 2 years, we have a program that goes around that, which we're going to touch in a little bit here. However, typically, if you've been here for 2 years or more, they just want to see 2 years worth of income tax statements. Or if you're working a job that is guaranteed hours and pay, which is what we need, we can get a letter from your employer that shows this is how much you make, this is how many hours you're guaranteed, just so we know how much you're going to be making. So whether that's salary or hourly pay, we need to see guaranteed income. Okay. And the reason why I say guaranteed is it has to be guaranteed hours and pay, not self-employment doesn't work right away. So if you're self-employed, work a commission-based job, work a job like Skip the Dishes, Uber, DoorDash, where you set your own hours, they can use those, but you have to have 2 years worth of income statements on that job alone to use it. If you've just started doing that within 6 months or up to a year, it's not enough time to see your baseline for income with it. That's why we say guaranteed hours and pay is usually the easiest. But again, give us a call anyways. Let us know what you're going through and what your situation is so we can see how we can help you and give you the right guidance. But this is just generally what they're looking for. Okay. So then you have good credit, you've got the income down. Now, the third and final one, of course, is a down payment. When you buy a house in Canada, the minimum down payment required is 5% of the purchase price. Okay, so they need to see that you have that saved up. There are about three ways to get that we use for a down payment. So, number one is the most common one, obviously, is your own savings. So, you've got the money saved up sitting in a bank account. You can show the lenders that here's my down payment, right? Pretty simple. If you're new to Canada and have brought money over, the money that you're going to use that has been brought over from wherever you're from has to sit untouched in a Canadian bank account for 90 days before you can use it. So just keep that in mind if you're starting to move money over into Canada. It has to be sitting there for 90 days untouched. Okay. But your own savings is generally the most common one to use for a down payment. Number two, if you have RRSP saved up, you can now withdraw up to 65,000 per person to use as a down payment. Okay. Now, if you and your spouse or somebody are going in together, you can combine that 65,000 together and go up to 130,000. Okay. If you plan on using your RRSPs, please reach out to your provider. Let them know you're doing this so they can provide you with the details on how you have to start paying it back, because you do have to start paying it back once you use it, and there is a time limit. There's a certain amount you have to pay back each year, kind of thing. So just make sure you're aware of that when you're using that. The third way is what we like to call the bank of mom and dad. However, it's technically a gift from an immediate family member. So when we say immediate, that's brother, sister, mom, dad, grandma, grandpa. That's it, right? Cousins, aunts, uncles, doesn't work, has to be immediate, okay? But they can gift you the down payment. They just write out a gift letter and say, we're going to give you this much to use as a down payment, okay? So those are your typical three ways of getting it. If anybody on here is part of the Métis Society of Saskatchewan, the Métis Society does have a first-time homebuyers program. They give you up to $15,000 as well as some closing costs covered. So if you're part of that and you want to know more, reach out. We're happy to give you the info and who to talk to. But that just works the same as your own down payment. They'll give you the $15,000 as long as you qualify for it. And then they just use it and talk with Ryan about it, and he can go through all that program with you as well. But those are typically the three things, okay? Again, if I'm moving pretty quick, sorry guys, we do have a time frame to get through. However, this is recorded, so you can catch up on this after, ask a bunch of questions if you need to. Again, if you want to know some more on it, book that call with us so we can talk about your situation. But that essentially is the three things they look for. But again, it's not exact, right? That's just what they need to see, and then they can work with every person. Okay. But the nice thing about mortgage approval is it's underwritten, so it goes to an underwriter. They review your income, your credit, and your down payment source, but they are reliable, and it tells us that maximum qualifying amount, like I mentioned earlier, is so important, is that we know exactly how much you can shop up to, because that is a big thing to deal with. Okay. We don't want to overshoot what you're approved for, because then it's just hard to go from looking at a $500,000 house to a $400,000 house, right? It's just so much of a change. We want to shop within your range, okay? Sometimes people, we've used these before. If maybe there's an issue of you getting a mortgage approval, maybe your credit isn't quite there, or maybe there's another issue to help that we need to help you out with. The other option that we have, this is again case by case situation, but if you have a co-signer, so somebody who can help you get approval, right? So usually again, that's an immediate family member, like I mentioned, as long as they can be approved on the mortgage with you. So maybe you have some parents, some mom and dad have really strong credit and good income and things like that, and they can co-sign on with you to help you get an approval. This is an option. Now, again, if this is needed. So obviously, first we'll talk and get your situation figured out. But if there's a bit of an issue, this is a step we can go to kind of help you out a little bit more. So the people that are co-signing for you, there is a risk to that. Obviously, they're signing on saying that you're good to make the payments, but if for some reason you miss any payments, they come after your co-signer to pay for it. So we want to make sure who's ever doing this is everybody is understanding of what goes on with this. They are committed to being on the mortgage and the title of your home for as long as you can't be approved on your own. But once you get to the point where you can be approved on your own, you can get them off your title and all that. You just have to go to a lawyer and get them removed from the title. So there's no extra costs doing this at the start, right? It's just later on when you want to remove the co-signers from your title of your home, then you have to pay a lawyer to do that, and it can be anywhere from $700 to $800. So most people choose to just wait until they sell the home and then everybody's name is off, and then you can go buy your next one without them being on there. But there's different options available for you. Okay, this is just another one of those things. So again, those are the three things. Again, I'll just recap real quick for you. You need to have good credit, you need to have income, and you need to have a down payment in order to be approved for a mortgage. But again, it's not one size fits all. Everybody's different. So give us a shout. Let us know how we can help you. See what we can do for you, whether it's a right now or a little bit later kind of thing. We're here to make it work for you at some point, either now or in the future. So what I'm going to do here now is, as I mentioned during this, that there can be people that are new to Canada. There is a really good new to Canada program that really doesn't change anything. It's just to help the people that are new to Canada establish credit a lot more faster than waiting 2 full years. It doesn't change interest rates. It doesn't change anything else. It's just to help qualify you a little bit quicker because you are so new. So I'm going to let Ryan touch on that with you guys and give you some information on that. So take it away, Ryan.
Perfect. Just got to get myself off of mute here. So, yeah, one of the things that we do hear a lot about, especially on these first-time homebuyer webinars, is people that are newer residents to Canada and newer immigrants into Canada. Now, one of the largest segments of the first-time homebuyer market in Canada and one of the largest drivers of the economy in Canada is our new friends and people that have recently immigrated into Canada, more specifically into Saskatoon, is what Andy and I are worried about. But we actually bring in over 1 million people into Canada each year, and this number continues to grow. So, really, the Canadian government and our mortgage lenders here in Canada were aware of this. They were aware of this trend. They were aware that people coming into Canada really wanted to get into housing quite quickly and didn't want to wait years and years and years for that to happen. So what they did is they developed this program called the New to Canada program, and it really realizes that most of our newcomers will be fairly new to their jobs coming into Canada. Most have not had the chance to develop a lot of credit in Canada yet, and really this program is designed for those people. So as Andy mentioned, the three pillars that we always talk about are income, down payment, and credit. Now, going through that, you'll see here that income and employment is one of the biggest things that we have to talk about. We have to make sure that you're going to generate enough money and generate enough income to afford that mortgage payment. Now, typically in Canada, uh, most mortgage lenders want to be confident on your income that it is going to generate sufficient money to make that mortgage payment long term, right? So they want to make sure that you're in a full-time job. They want to make sure that you have some guaranteed income, some guaranteed hours, and things like that. So really what they're looking for here, number one, the borrower criteria. They want to make sure that there is some stability with that borrower, that they are going to stay in Canada. So the two programs that they have allotted for the New to Canada program, if anybody is on a permanent residency, other than being a Canadian citizen, that's kind of the number one thing right there. So if you are a permanent resident coming into Canada, automatically that does put you into that New to Canada program, and you do qualify for it. The other permit that they will allow is if you are coming into Canada on a valid work permit. So if you are here on a valid work permit, that does have at least 183 days left on it, 183. So if you have 183 days left on that valid work permit, that will also qualify you to purchase a home under the New to Canada program. Most people figure that they have to be a Canadian citizen or they have to be a permanent resident to qualify, and they don't realize that the valid work permit also does qualify them. So know that that valid work permit does qualify them. Now, typically, that people coming into Canada, we're talking new to Canada in the last 5 years. Realistically, if you've been in Canada 5 years or longer, you've likely either got your Canadian residency or your permanent residency, and you also have likely Canadian credit established. Usually, people coming into Canada right away, they get set up with bank accounts, they get set up with credit cards to start building that credit. So, if you've been here over 5 years, you probably have really good employment. You probably have really strong credit as well. So these are for the people that are underneath that mark that may not have a lot of that Canadian credit set up. So as far as the employment goes, of course, we're looking for people that are minimum 3 months full-time employment, unless you've been relocated with a corporate relocation into Canada. So that is an exception. If you're working with the same company, you've maybe just been transferred to a Canadian office, that does count as well. They want to know that you are paying Canadian income tax in Canada as well. So, you're working for a company that does take off employment insurance, CPP, all the Canadian deductions, and that you are taxed here in Canada. Now, one of the biggest questions that we do get, and this is just a little bit of clarification, especially with people coming in new to Canada, is hey, Ryan, I'm here with the kids, I'm working full time, but my spouse is still working in another country, generating income in that previous country of residence. Can I use their income to help me qualify on the mortgage? And unfortunately, the answer is no. Realistically, from a mortgage lender point of view, they have very little strength or the ability to clarify income from another country. So we want to make sure we know the rules in Canada, we know the laws in Canada, we know the companies in Canada. We have the ability to run the checks to ensure that the information is legitimate. We don't have that ability if the information is possibly coming from another country. So we do want to make sure that people are working in Canada and their income is taxable in Canada. Now, what we typically do, I had a great question from Sindhu there. Do most lenders use gross or net income? That's a great question, by the way. Most lenders use gross income to qualify. So if you have a salary of $65,000, they will use that 65,000 as the gross income to qualify, not the after-tax amount. They will use the gross amount, not the net. So great question there as well. Now, what do they ask for with income? So if you're working for a company, your employee, you have all the normal deductions taken off. Typically, what we're going to ask for is a letter of employment and a current pay stub. As long as those two things match up and they have guaranteed hours or guaranteed salary on there, we can use that information and that salary or guaranteed hours and wage to qualify you for a mortgage pretty much right away. Okay. Now, we do see a lot of different kinds of income. Now, one of the big things that we do see is that people are either on expiring contracts, maybe self-employment. As Andy mentioned, even things like DoorDash and Uber and things like that, those are considered to be self-employment. Okay, you don't take taxes off at the source. You're usually your own company there. So what anybody that's on self-employment or expiring job contracts, things like that, what they want to see, because there isn't the structure and longevity of that income yet, they do want to see a snapshot. They do want to see a 2-year track record of that income being generated before they will qualify you for a mortgage. So usually they look at your last 2 years tax returns, they take the net income and gross that up by 15%. So that's kind of how self-employment works. Self-employment, 2-year track record. If you're working for a company, typically you can get in right away, usually after that 3-month mark. Okay. Now, pillar number two, of course, is the credit requirement. Now, this kind of works hand in hand with the last pillar, with that down payment piece. New to Canada, because as I mentioned, most people coming into the country don't have a lot of credit established. So what they do is they really kind of say, we're going to give you options that we can show some credit stability. And with each type of credit stability that we're going to show, there's different down payment tiers. They kind of work hand in hand. So we'll start with the credit side here. So if you have been in Canada for under 12 months, so what they like to see and what we need to show them is 6 months of a well-handled bank statement, a bank account. So typically the first time you come into Canada, the first usually the first thing they have you set up is they get you talking with a bank. They get you a bank account set up, and they get you a credit card to get your credit moving. Okay, so what we need to see is 6 months worth of bank statements, just to show that they're well handled. There's no missed payments, there's no NSFs, your pay goes in there nice and steady, just to make sure that they're well handled. So 6 months worth of those statements plus a 10% down payment. Okay, so really easy. The 6 months down payment really kind of coincides with the 10%, or the 6 months bank statements really coincide with the 10% down payment. So a little extra down payment, pretty light on the credit side. And that can get you into a mortgage here right away in Canada. That qualifies you with the down payment and the credit side underneath the New to Canada program. Now, if you have been here over 12 months, you are qualified right away to go back to the full normal 5% down payment. What they ask for is a little more on the credit side. So if you've been here over 12 months, what they ask for is 12 months of a good rental payment history. So we're going to get a letter from your landlord and bank statements to show that that rent's been paid for 12 months. And we're going to ask for 12 months of one other payment, any structured payment that you have. That can be a utility, a Sask power bill, a Sask energy bill, a Shaw cable bill, your phone as SaskTel. If you have a car, your car plates with SGI. Anything that shows a structured payment made well for 12 months, plus that 12-month rental payment, counts as your credit stability, and we can get you in with that 5% down payment. So realistically, under 12 months, you're looking at 6 months bank statements plus 10% down. If you're over that 12-month mark, we want to see the rental landlord letter, one other bill plus 5% down payment. Okay, so as you can see, kind of reading between the lines there, really like to have you here in Canada for at least 6 months before you will qualify with one of those programs. Okay, so if you do we do kind of need to see a little bit of that credit stability. The minimum in there is that 6 month bank statement. So usually 6 months is the starting window to get somebody into that New to Canada program. Okay, so you'll kind of see how this ties in with the last slide here. And the last slide, of course, is the down payment side. And it's really just the mirror of what we're talking about here. So as you can see again, really, if you've been here less than 12 months, you'll be required to put down that 10% down payment using that 6 months bank statements. If you've been here for 12 months or longer, you can put down the minimum in Canada, which is that 5%, but you do have to show a little bit more documentation on the down payment or on the credit side, being that 12 months worth of rental history plus that other bill for 12 months as well. Now, as Andy mentioned, we do have some great options here for where that down payment can come from. Now, of course, if you have the cash in the bank, cash is king, that works great. Does have to be in a bank account. So when I say cash, I mean savings in a bank account. Unfortunately, cash that is sitting in your hand or in a mattress underneath your bed or locked in a safe, unfortunately does have to go into the bank for at least a minimum of 90 days. Okay, cash cannot be used because the bank cannot track where that cash came from, right? They need to make sure that it is not proceeds of crime or not proceeds of money laundering. So we need to make sure that any cash in hand does have to be in the bank for at least 90 days, 3 months. Okay, so if your down payment is cash in the safe, throw it in the bank right now. It does have to be in savings. Okay. Now, the other options that Andy talked about, the bank of mom and dad. So you can borrow money from parents as long as they are an immediate family member, mother, father, grandparent, or child. That can be borrowed from an immediate family member and considered a one-time gift from family. That is allowable for down payment as well. Now, one of the questions I just got asked as well is, can I use RSPs for my down payment? Absolutely. RSPs can be used for down payment. Couple of things I will clarify that for you. Now, we can use up to $60,000 worth of RSPs to pull out and use for down payment. For first-time home buyers, that can be taken out of your RSP tax-free. It does have to be put back into your RSP over a period of 15 years. So 1/15 of the money you borrow does have to go back into that RSP every year to ensure the tax-free status. Okay, a couple of things, pardon me, a couple of things on the RSP as well. Please clarify with your RSP provider that the funds can be redeemed. Okay, so typically RSPs can be through a few different channels. If you work with an employer that has, say, a group RSP and you put in 5% and your company puts in 5%, usually the 5% that your company puts in goes into what's called a locked in fund or a LIF. Okay, so a locked in fund typically cannot be removed out until you retire. So only the 5% that you would put in would be allowed to be redeemed. So check with your RSP provider before we get too far in. I always ask when RSPs are a part of the down payment, have you checked with your RSP provider to make sure that those funds can be pulled out? Because typically anything in a locked in fund that is part of what your employer puts in usually is locked in until your retirement and cannot be used for down payment. The other thing to worry about when we put money into RSPs is what type of a fund they are put in. Are they just in a cash account? Are they in a mutual fund? Or are they in a locked in GIC? Usually, anything in a mutual fund or a cash account can be liquidated quite easily. Anything that is in a GIC, which is a guaranteed income certificate, typically has a timeline on it when those funds can be redeemed. And some of them are locked in until that date. So if you have a 1 year or a 2 year GIC, sometimes RSP providers will ensure that you are fully locked in until that date before you can pull the money in. Some will allow you to pull it out, you just lose the interest on it. So make sure you're checking with your RSP provider to ensure that those funds are available to be pulled out and how much of that cash will be allowed to be redeemed. Now, one thing that I did kind of want to talk about here on down payment, and this is kind of something that Andy come up against a few times as well, is money coming from overseas. So, for example, if you come in to Canada within the last couple of years, but you've left a bunch of savings in your country of origin and you're just looking at bringing those over, typically what we tell you is as soon as you can get those funds into a Canadian account, do it, because it can be it depends on your country of origin. Some are really easy to transfer funds into Canada. Some take a lot of work to get them out. Some have timelines that you can only move a certain amount of money out per month or per year. Some have quite large costs to move money out of your country of origin. So have a look at that. Get that money moving into Canada as soon as you can. What we typically look for on a down payment timeline is the lender will look at a 90-day, 3-month history to ensure that the funds have been in your Canadian account for those 3 months. So if you are moving money from somewhere else into Canada within those 3 months, we're going to have to track the money all the way through the different accounts. So sometimes that means checking 3 months worth of your country of origin bank accounts as well. Sometimes that money may have issue moving into Canada. So let's get that money moving. The longer we can have that sitting in your Canadian account, the better you're going to be. And if it's been here 3 months or longer, we're looking good already. So if you are thinking about using those types of funds for down payment, get those moving. Let's have a good conversation about where those funds are and what they look like, and we can give you the best advice on how to move those out and when to do that. So as you can see, there is a great option for people, even though you are fairly new into Canada, to get into a mortgage quickly. We are here to help. We know all the rules around how to best navigate that program, set you up for a pre-approval that works really good with your timeline. And again, click that booking link. We'd love to chat with you one-on-one on your individual situation and give you the best advice to get you set up as quickly as we can. All right. I'll pass you back to Andy to keep moving on that webinar here tonight.
All right. Awesome. Thanks again. I appreciate just going through all the questions here and things like that and making sure we're all good. But lots of great questions. Keep it up, you guys. We have some time. I got some more things to cover before we kind of wrap up here, but I love all these questions, so I appreciate it all. Okay, so moving on to the number three mistake for the financing side of three of these things, sorry, is using your bank. Now, there is nothing wrong with using your bank. Lots of us have a bank we use, whether it's RBC, Scotiabank, CIBC, whatever, you name it. Banks are great. I just don't recommend using a bank for your mortgage for your property. And there is a reason why. I honestly, from experience, doing this over 5 years now, or about 5 years, I've had lots of experiences with different financial institutions. So most of my stuff goes through Ryan, but there's always going to be a time where you have somebody that has a good rapport with their bank or with somebody else, and it's fine. But I've honestly had more issues working with banks than I have with mortgage brokers. Honestly, it's just banks they just don't have that quality that you find in a mortgage broker. When you're buying something as important as your first home, you want to have all the clarity and everything, and all the, I guess, the customer care while you do this. You want to know what's going on. So this is a reason why I don't recommend using an in-house mortgage broker. So when I met Ryan, I didn't really have a go-to person. I met Ryan, now he's my go-to person because of the way he works, the way he takes care of his clients, the way he gets things done when we need them done. So the thing is, when you go to Ryan, Ryan has access to over 30 different lenders' products. Okay. So it's like shopping for anything. He's going to give you options at a lot of different places. And we've had people that say, oh, well, I really like Scotiabank. Okay, well, we can work with Scotiabank, right? He's got so much access to different lenders, but he can also find you a better lender that gives you a better product at a better interest rate, right? Where the banks are restricted to their one in-house product. So if you go to each bank, they have their own product and that's it. Where Ryan can just shop it around to find you the best option. He works the same hours as I do. We know that real estate is usually an evenings and weekends kind of job. We're usually house hunting after you're done work and on a weekend when the banks are closed, right? I've had it where we've been writing an offer at 7, 8 o'clock at night, and I have a question before we write the offer, but they're working with a mortgage broker who works for a bank who is now off for the rest of the night. And I don't want to lose this house, but I also don't want to write an offer that we don't even know if there's financing in place, right? So the nice thing about Ryan is that if I got a question and I'm writing an offer at this time at night, he's going to answer me. He's going to be like, yeah, this is what we need to do. Done. It's just so much easier to do with it instead of trying to work with real estate that's evenings and weekends with somebody who's only working normal work hours, right? It's not as easy. It gets kind of confusing and rough. Okay. Ryan's going to offer you his best mortgage rate up front, right? This is the mortgage, is the best one with the best product. The banks typically offer their bank posted rates, and you may need to negotiate a better rate, which lots of people don't like to negotiate. So leave that and let us do that for you. Okay. Let Ryan do that for you. And again, Ryan does not work for a lender. He doesn't work for Scotiabank or RBC or CIBC. He works for the mortgage group, which means he works for you and you're his client. He doesn't have any interest in the banks, where the person that works at the bank has to make sure their employer, the bank, is happy, as well as working for you. So there can be kind of a conflict there. We just want to avoid that and have somebody who's going to work hard for you and only you, right? And like I mentioned, you can call or text him anytime with any question. Whereas the banks, once they close up for the day, you're not getting a hold of them until the next day if you're lucky. And trust me, when we're going through the condition phases and getting financing done, and I need to email 100 times and call the office 100 times and they're not answering me, it's very frustrating when we're trying to get a deal in place. Okay. I've never had it frustrating when I've dealt with Ryan at any time, ever. Honestly, I can say that honestly, never. Okay. So it's very important to know who you're working with to get you that financing. That's why there's such a mistake using it, because it's going to be a headache. Again, not 100% of the time, but majority of the time I've dealt with it, it's been a headache, right? There are things called bank penalties. And what's a bank penalty? Well, when you get a mortgage, it's typically 25 to 30 years for a mortgage, right? So you have 25 to 30 years to pay off your home, right? So let's say you've bought your home and 5 years later, you're like, well, I got a new job. I want to upgrade my house, or the kids have moved out. I want to downsize, or I want to move to a different city or country, right? I have to break my 25-year mortgage because I've only been in it for 5 years. Chances are you're going to have to pay some sort of payout penalty because you've broken your mortgage. Now, what we want to do is have little to no payout penalties. We can't guarantee none, but at least we can say, it's going to be a little bit to do that. Whereas bank penalties sometimes can be more expensive. So we don't want to penalize you for trying to upgrade or change your life, right? It happens. Most people don't stay in their first home for the full 25, 30 years. It's a stepping stone to the next one, right? So chances are most of us are going to break that first mortgage to upgrade, right? It just happens. So we don't want to penalize you for that. Okay. So those are some things to think about. Again, we're here to save you money, right? We're here to make sure you don't make the same mistakes that a lot of people do to make the first buying process a headache. We want to make sure we save you money by not having expensive payout penalties. We want to make sure you save money by having lower interest rates, so you're not paying interest to the bank and not on the principal of your home. We want to make sure you know about the New to Canada program and make sure you're getting the best pre-approval out there to get you the most for what you can buy. Okay. That's what we're here for, to save you money on this financing side of things. Now, there's a lot of good questions coming in. I see. I'm gonna keep letting Ryan do this thing. Book a call with us. Let us check out your finances. See if you're ready to go right now or later or whenever you're ready. There's no rush to it. If you say we're not ready to buy until next year or 6 to 8 months, that's fine. But at least let us get you on the right track so you know when that time comes, you're ready for it. Okay. I am going to move quickly on to the real estate side of things to show you how I can save you from mistakes and save you money there. And we'll get you out of here by 8 or just after 8 here. Okay. So mistake number 4 is buying directly from a builder. New builds are more common with first-time home buyers now just because of the market, the way it is. So there is a mistake of going directly to a builder. People think that I'm going to save money by going directly to the seller or the builder, and that is not true. You want somebody who's going to take you there to negotiate against the builder, right? When you go into the builder, they're going to try and sell you their product and their product alone. I can at least shop you to different builders. I can show you different options that may be a better fit for you guys. I can show you which builders are good, which builders to avoid, which ones offer different things, and who are good at negotiating. So most of the time, builders do not touch the purchase price. If they're offering it at 450 or 500,000, they're not going to move off of that because chances are they're building a lot of homes and they don't want to affect their purchase price. So they don't negotiate the price. However, I can negotiate other things on that. So usually when you buy a new build, there's not much in them. There's your main floor, the basement's undeveloped. There's usually no backyard landscaping. There's usually no appliances, no air conditioner, right? So what I can do is help negotiate some of those costs into it, right? Say, hey, we're going to buy this from you, but we want you to throw the appliance package in, or we want you to put an air conditioner in, or a back deck for us, right? Sometimes we can't negotiate those in fully, but let's say I want to put in an air conditioner and an appliance package, which is going to cost us $17,000, but you guys put it in for $8,000, right? Or $10,000. Let's get some money off so you're not paying full price for it, right? Things like that we can do. Like I said, it doesn't cost you any more or less to go to the builder. However, if something comes up, let's say a year down the road and there's an issue with the building or you have an issue with the builder, you want somebody on your side to fight with you instead of you alone against the builder. And like everything in life, there are things that come up that are unavoidable, right? But you want somebody who has contacts and people that can help you fight that on your behalf instead of you alone out there, especially something like going against a builder, right? So you want somebody who's going to negotiate for you, get things thrown in for you, save you money that way instead of paying full price for things, and kind of work with you on all that. Okay. I don't touch a whole lot on new builds because new builds are their whole different thing too. Most of the time, new or first time buyers look at resale already lived in homes, but sometimes new builds are a thing. So we can go over that if that's something you want to talk about later on. Happy to talk about that. But um, one of the more important things about buying any home, whether it's brand new or a used home, is get a home inspection. This is probably where you're going to save the most amount of money and issues is this one right here. If you skip a home inspection, you'll have no idea if there's anything wrong with the home. Okay. Usually this is where I ask you about the price and stuff like that. However, we're running out of time, so I'm just going to flat out tell you the cost of a home inspection on a typical house is 450 plus tax, which comes out to about 475. Okay. I've had people say, well, that seems like a bit much, for an inspection. However, you're buying a $400,000 house or a $500,000 house or even a $300,000 house. $400 is nothing compared to what you learn about this place you're potentially buying and paying a lot of money for that you're going to live in, right? When we do a walkthrough of a home, I do my best to look everywhere I can about the house to make sure it's good investment from what we can see. If there's things in a house, there's so much in a house that you can't see. Kind of like buying a car, right? When you buy a car, you can open the hood, you can look inside it, but you don't know how the engine runs inside without knowing about mechanics. Same with the house. There's so much stuff that goes on inside the house that we can't physically see. So we don't know, and it costs you a lot more to fix these than it does a car. So we want to make sure you understand what's going on. So a home inspection is a condition. When we write an offer, we say it's subject to a home inspection. If you are not satisfied with the home inspection, we walk away from the house and go find something else. Okay. If there's issues in the home inspection that can be fixed, we can either ask the seller to fix it, ask for money off the purchase price so you can fix it later, or like I said, you could walk away. Okay. There's some options in case there are issues that come up. Now, this is typically what we see in an average home inspection. So a home inspection is not invasive. Okay, they cannot open up walls, look behind things. They can only visually look and test everything. But they have infrared cameras. He's looking through the walls and the ceiling to make sure insulation's there. There's no cold spots or hot spots, right? It's also a moisture meter. Tells us if there's any evidence of moisture coming through the walls or the foundation, right? They'll check your electrical. So your electrical panel, every single plug-in in the house will be tested to make sure it's all working properly and not going to start a fire. And they're going to test every piece of plumbing in the house to make sure there's no leaks. And if there were leaks, how long ago was it? And is there still an active leak? So on the bottom there, you can see that he's running the plumbing, but they also noticed a leak with his thermal imaging camera. We had them fix for us before we took over. Okay. A big thing because now if you're new to Canada, haven't experienced a Canadian winter yet, good luck, hang on, it's going to get cold. A furnace is probably your most important piece in the house. It runs your furnace and heat for the winter, and if you've got an air conditioner, it cools you down in the hot summer. So they're going to open up the furnace, they're going to test every bit about the furnace to make sure it's working and functioning properly. They're going to test every piece of appliance in your house to make sure your appliances are working properly, right? It just goes on. They'll go up on the roof to make sure your roof is good. They're going to go in your attic to make sure there's no leaks in the attic and make sure things are vented properly. They're going to walk around the house to make sure the siding and the doors and the windows are all good. Check your garage. They literally check everything. It takes hours to do this, okay? But it's so important to have this done because if you miss and have no idea there's issues with your house, if you have a leaky roof, a roof is a good 10 grand to fix or to get replaced, right? Easily. If there's a leak, you can fix the leak, obviously. But then if you don't see there's mold that's been created, or there's an infestation, or you have a cracked foundation that's going to leak, there's just so much that can go wrong that you don't know about. Maybe the electrical is toast and you got to replace the electrical, or the plumbing is toast, or some issues with that. There's so much you can miss in a home inspection that you don't know about. That's why it's so important to pay the 475 or the $500 to get it done because it will save you tens of thousands of dollars if you miss something. And once you remove conditions and you didn't have a home inspection, you have no leg to stand on if there is an issue in the house. At least with a home inspection, if there's an issue that was, for whatever reason, there is something you can fall back on, right? You say there was a home inspection done, this was caught or uncaught, and then you can go from there. However, without getting that done, you are essentially on your own. And if it's a major fix, it'll be a major one. Okay. So it'll save you a ton of money. Simply get one done. I recommend it for new builds and resale homes because new builds, builders are human too. They do miss things. Okay. So it's good to have these done no matter what property you're buying. And no matter how capable and handy you are, get somebody to look it over for you. Okay. All right, we're getting close to 8 o'clock. One more thing that's going to save you money, then we'll move on to the Q&A part. The last little bit is skipping a condo document review. Again, this is a condition if you're buying anything that has to do with a condo. Apartment condos, townhouse condos, some houses are part of condo corporations. If you're buying something that has that is part of a condo corporation, it's mandatory that you get a copy of the condo documents, which are called an estoppel. Okay, it has all and everything about the condo in there, how it's run, has it been audited, what's the reserve fund, what's the maintenance fund, how much are condo fees, what the bylaws are, who does the insurance, who does snow removal, and on and on and on and on. Okay, there's like 100 pages of these things. But what's not mandatory is getting a lawyer to review it, who is the one that is qualified to review it, right? But you will be paying a lawyer to do the transaction, so we're just going to get them to look at it anyways, because they will tell you whether it's been run properly or if there's some major issues coming up, which I've had that before and we've walked away from it. This, again, is another condition in case it's not good, we can walk away. Okay. Um, so the main part about these estoppels is the reserve fund. So the reserve fund is how much money the condo corporation has saved up in case of any issues that come up. So to fix things, a lot of them will have like 100,000, 200,000, 300,000 in reserve. But if the condo does not have that and an issue comes up where they have to fix something and it's a major fix and they don't have enough money saved up to fix it, they do what's called a cash call. Okay. They'll come to each unit owner and ask you for more money to pay to help fix it. So it could be a few $100s up to a few $1,000s or more. Depends on how the condo is run. Now, most of the condos we buy in the city are usually run fairly well. There was the odd one or two I've had in the last 5 years that we've walked away from because it was not run properly, but most of them have been run properly. However, that's just something we want you to look for. That's what the lawyers look for, and they may say, hey, this place hasn't been audited correctly, their finances are all out of whack. There could be a big cash call coming. It's up to you if you want to proceed, but just be aware that this could be an issue. So, again, like we're here to save you money, we want you to be aware of that issue before you move on with it. As well as the bylaws are very important because some bylaws in some units will have a bylaw about renovations. So, some apartment condos in the city, some of the older ones, may have a bylaw saying you can't have laminate or hardwood floor in the main living area of your condo, only carpet. So we don't want you to go in there, rip the carpet out, put nice laminate down, spend all this money, and then find out after that you weren't allowed to do that. You got caught. They're going to fine you, and you're going to have to replace all that stuff you did again. So essentially doubling your renovation costs. So again, we just want you to make sure you're aware of everything in the condo, what the bylaws are, how much condo fees are, and make sure that the reserve fund is healthy and not have any issues in the future. Okay. Again, this is to save you money and save you headache in the future. Condos are a good investment. I have no issues buying condos. But of course, if you're buying one, we just want to make sure you are fully aware of the going ons with the condo. You are purchasing into it, you want to know about it, you need to be fully aware of it. So again, it could save you a few hundred to thousands of dollars if you don't get that reviewed properly by a professional like a lawyer. Okay. Oh, okay. Lots of talking. We are, well, maybe at 8 o'clock, but again, those are, like I mentioned earlier, this is all just your first steps. Okay. Get financing, get that done. And then these things just be aware of as we go through the buying process. But there's so much that goes into it too, but it's kind of a case by case situation. Each property is different than the next one. So it kind of becomes a learning on the fly kind of thing. But this is the basics to get in there. So I know we didn't cover a lot of the market and stuff like that, which we can do right away. But I hope at least we kind of gave you an idea that, hey, there's people here that's going to help us get us on the right track, whether it's tomorrow or down the road, right? Whether it's a month, 2 months, a year from now, there's people here to help you. I hope we have alleviated some of these things of how to get started, how to go about it, that there's people here to save you from making mistakes, not just, we're just going to find you a place, get you in there, and off you go, good luck. No, we want to make sure you're doing the right thing at the right time and make the right smart investment. We'll honestly be the first people to tell you don't buy this house. There'd be so many times that we go into a property that the minute we open a door, I look around and say, no, this is not a good investment. We are out of here. This is too much. There's too much work. There's too many issues in this house. Let's go find something else, right? We're not just going to say buy it for the sake of buying it, right? So hopefully that helps a little bit. I see there's a ton of questions coming up here, so I'm gonna kind of yeah. So like I should put here, I'm gonna put in here this booking link one more time. So this is a booking link. Again, if you want to know more about it now, later down the road, want to talk about your own personal stuff, book that call with us. Let us figure out what we can do for you, how we can help you right away or later on. We're happy to help. But this is kind of what it looks like. You book the call, it brings up the calendar. We'll find a time that works with all of us. But yeah, that's kind of it for now. I know it's a lot. I know I kind of threw a lot at you guys. Like I said, there's going to be a email coming at you tomorrow with a recording of this, so you can watch at your own pace or book a call with us. Give us a shout. Ask us questions as much as you need. We're happy to answer all those. Um, yeah. So again, thanks for everybody. Ryan, you want to kick back in here too, and we'll see if there's anything we got to touch back on.
Just kind of finishing up some questions here, Andy. Some absolutely great in-depth questions, you guys. Well done. I'm just going to finish up this one here from Shriela. She asked, "Do we get a tax return after we buy a home or condo?" Absolutely, yes, you do. So what happens is the year that you buy your new property, on the following year's income tax returns, there's actually a spot in there for I think it's about a $1,700 rebate that you get for back on your income taxes for the year that you purchased the home. So yes, there is a little bit of an incentive there in your income taxes the year that you do buy your home. So great question there. Some fantastic questions on everything from incomes to home inspections to down payments to incomes to co-signers. Such a great job, you guys. Hopefully, the information went out quickly enough that you got to kind of read through it. New question coming in here from Lily. What do you think about buying a pre-owned home as your first home? That's a great question. We hear that a lot. Everybody really gets stuck on buying new construction, but just to let you know, most of the purchases that happen in the real estate market are resale homes. And there's great resale homes. Usually they're in well-established areas. The property themselves are finished and well-established. I've only bought one new home in my life, but I bought 7 resale homes. So I'm going to pass that over to the expert, Andy, and let him talk a little bit about this. But that is a great question, and hopefully he's going to talk a little bit about market in that too, give you a little bit of insight there. So go ahead, Andy. Why don't you give us your thoughts?
Yeah, no, that's a great thing. Majority of first-time buyers buy pre-owned homes. Actually, every house that I've bought has been pre-owned. I've never bought a new home. The nice thing about pre-owned homes is it's like I kind of always compare it to buying a car, which is not essentially true for this part. But it's like buying it, it's the kinks have been worked out of it. Everything essentially, usually with pre-owned homes, most of the stuff has already been worked through. Um, it's fully developed most of the time, right? When you buy a new build, like I mentioned earlier with new builds, you just get the basics of a new build. You get the house, you get the main floor, and potentially like second floor if you're buying a two-story. The basement is completely undeveloped. You'll have no backyard or fence in the backyard, so you'll have to develop the landscaping in the back. Some don't even come with landscaping up front, so you have to put that in. Lots don't come with appliances. Lots don't come with air conditioners. There's no blinds that are put up. So when you buy a new home, you need to be prepared to start putting a lot into it to make it, you know, fully developed house, right? Whereas we always recommend a pre-sale because, yeah, okay, it's not brand new, but everything's done. Usually the basement's already developed, the backyard has been developed, there's an air conditioner in there, things are all already been worked through, and there could be already updates been done. So um it depends on each person. I've had new people buy brand new builds, but most will go for pre-sale because it's essentially I'm just going to move in and I can start making this my own because it also depends on your budget, right? Sometimes your budget doesn't allow you to get into a brand new build, at least into it with appliances and things like that that you need. So we go pre-sale, make it your own, do the updates if you want or down the road, and then you can build up to your next one. And that next one, that one could be your new build or your next forever home, right? Whereas these ones is get in and make it your own. I think pre-sale homes are a great option. Like I don't ever like it's obviously one of the better choices in my mind just because it's already done for you, right? The reason why new builds, like Ryan mentioned about the market, the reason why new builds are getting more popular is because there's low inventory and people flood to resale homes because, like I mentioned, they are ready to move in, right? There's no really work to be done. You can just move in and start living, and then you can do renovations and things as you're going in there. So, but because it's a little harder to get into those sometimes, people look to the new builds, then they can get into those and start building as they go with that one too, right? But it's like I mentioned to everybody, when you go to buy a home, every home that's on the market is different than the next one. It's a case by case situation. So we kind of just take it as we go, but I do highly recommend a pre-owned home because usually that fits your budget the most. Again, a lot of these questions could be really long-winded, but yeah, pre-sale is honestly not an issue at all with that, right? We just want to make sure, I've also, along with the pre-sale part of things, I've had people say, well, I don't want to buy a home that's older than 10 years old. Okay, fair enough. But I would never shy away from an old house too. My first house I bought was built in the 70s. It was a solid house. I loved that house. We only moved because we were moving to Warman, right? But I love that house. It was a 70s house. So if you're looking at an older house, whether it's, you know, 20s, 30s, 40s, 50s, up to the 80s and 90s, the things we look for is what has been done for upgrades. Furnace, roof, windows, those are usually the main things I want to know. Have those been done? Water heater, has those been upgraded? Then we can look at flooring, paint, doors, things like that. But has the major stuff been upgraded? And that's the things we want to look for and watch out for. But I never shy away from old houses either. They're a solid investment too. Um, what else do we got?
And keep in mind too with those older homes, guys, and I say older like 70s or 80s. My wife's favorite house, and she still raves about this house, was our second home, and it was built in 1979. And the design was something that she absolutely just loved. The yard was huge. It had a beautiful set of trees in the backyard. The yard was a lot bigger than most of the new construction yards today. The basement was finished, the driveway was finished. As Andy mentioned, you kind of look at a few things like, has the furnace been upgraded? Has the water heater been upgraded? Most people, as they live in homes, they will continuously renovate them as well. So just because it is a resale home built in the 70s or 80s, continuous upgrades have likely happened on that home all the way through it to keep it current because people, your home is your castle, right? So most people will, every time they get, they'll change a room a year. We did renovations on our home for 5 years, and redid the kitchen, redid the living room, redid the bathrooms. Also know that if there is something that, typically resale homes can be bought maybe on a little bit less price point than a brand new home. So you have a little bit of budget to play with. And if you want to do some renovations, put in new flooring, put in a new kitchen, we can add those renovations into the mortgage budget and help you do that on a purchase plus improvements basis. So know that just because a house might be a few years old doesn't mean it's A, in worse condition, and B, that it can't be upgraded. So lots of things that we can do to help you out with that as well.
Yeah. I also want to touch on that home inspection one too, because I feel that one I kind of have to run through a little bit. Um, but I'm going to slow it down a little bit now. I seen how does the inspection work? So if buying and we see some problems with the house, who will be accountable, the buyer inspector, and who can we kind of claim on? So as I mentioned with a home inspection, it's part of a condition to buy your home. If we do an inspection and it's very bad, we can walk away and go find something else. But what you're going to find with any home inspection, and I would say every home inspection I've been a part of, the home inspector will find something. That is a given, right? So don't be scared that he's found a list of things with the house. Most of the things are little things that aren't going to affect you living in the house. They may say like a plug-in in one of the bedrooms isn't working properly. Recommend you fix the plug-in, and that's a plug-in from Home Depot is like $5. Okay, easy fix, right? Maybe this light isn't working properly. Easy fix, right? It's usually little minor things that doesn't affect you living in it, but it's those things that we look for. So if we do a home inspection and let's say there is an issue with the plumbing. There's like maybe a sink is leaking or a toilet is leaking. We can ask the sellers to fix that before we move in. Or we can, maybe there's, like I said, you can ask them to fix it and they get it done for you before you move in. Or you can say, you know what, it's going to cost us $1,000 to fix these things. Can you take $1,000 off the purchase price and we'll just handle it on our own, right? There's that option as well. So there's so many different things. And again, each report is different. Especially as a first time buyer, though, you will learn to fix things on your own in your house. That is a given. But I've helped lots of buyers when they move in, they're like, this isn't working. I kind of come over and take a look. Honestly, Ryan and I have been helping this couple out. We helped buy their first home 3 years ago. Now we've bought them an acreage. And what was it, yesterday or the day before? Their house they have sold that we bought for them, the sump pump stopped working on their inspection report. So the sellers of their home asked us to fix it and replace it. So he went out and bought the pump. I went over there and I replaced it with him. We had our hands in that dirty sump and we got it fixed for him. It's just part of home ownership, right? So we can just ask them to fix stuff for you, ask to take money off to get it fixed, right? It all depends on each property. But again, if it's really bad where there's like a cracked foundation, or there's a massive leak in the roof and it's going to replace the whole roof and it's going to cost 20 grand to do that, then you have the option of either getting them to fix it as long as they agree to it, or you can walk away, right? And say, you know what, we're not going to deal with this. We're going to go find a different house. It happens. That's what they're there for, and that's where we protect you guys. We don't want to just put you in something and then we find out that the it's not structurally sound, right? So that's the whole idea of it.
Yeah,
Uh,
and I just wanted to kind of just to add a quick comment on the questions as they were asked. It's really not about accountability or claiming. This is the inspection is done for you. The inspection is done to give you, the buyer, as much information on that property before you remove conditions so that you can, say, yes, a light switch or a plug-in's not working, not a big deal. Or there's a crack in the foundation, it's been leaking water for 20 years. That's a big deal. We're going to walk away from this home. So it's really giving you as much information about the property to make the best decision that you can on how to move forward. If it's something small and you want to, negotiate with the seller to knock a few bucks off, things like that, we do that all the time. If it's something that's major that you don't want to proceed with the property, we have the option to walk away right then. And believe me, we have advised people to walk away on properties that we just don't think are a good fit. Our job is to protect you all the way through that transaction, and that means making sure that you're going to get into a property that really works for you and your family. And having that home inspection allows us to say, we found something major. I don't think you should put your family into this home. There's a major issue that could cost you a lot of money. I don't want to see you go through that. Or at least give you the information that you can make that decision on your own as well with our help. So that's really what that inspection is for. It's not about saying, oh, he missed this, I want to claim that. It's really about giving you as much information on the home to make all the best decisions that you can on how to move forward.
mhm. Perfect. Yeah, exactly. So, anything else that we can cover? Another one here. Yeah, how can the new to Canada help out to secure a home because I seem to meet all the criteria? So that's again,
We would love to talk to you, Lily. Yeah, let's book that. Click on that booking link. We would love to talk to you. If you meet all those criteria, let's talk to you one on one. Let's have a look and a good chat one on one just to make sure that we can find out a little bit about you and what you're looking for, and b, making sure that you do meet all of those criteria. And if you do, we'll get that pre-approval started right away and give you a good idea about when that timeline would work well for you and how much of a home you'd qualify for. So if kind of what we've talked about, you meet all those criteria, give us a call. Book that. Please click on that booking link, book a call with us. Let's talk one on one and make sure that we do kind of talk about you individually and get that process moving forward for you. We'd love to hear from you.
yeah, that's good stuff. I love it. I love it. I love all the questions. So, Yeah, if anybody's got any more, like if you guys want to know more about anything about it, like I said, there's lots that goes into this, like so much that goes into this, and you'll see as at some point when you go along that there is a lot, but it gets a lot easier after you do it once or twice, right? The first showing is always the most overwhelming, then it just gets easier and you kind of get in the flow with it all. We walk you through the offers, everything like that, what you need to know for getting the financing in place. It's so hands-on. That's what we're here for. So, if you guys, I appreciate everybody who has booked a call with us. We have quite a few that we're going to be talking with here, and I look forward to doing that. Um, and yeah, so book the link with us. Like I mentioned, you guys are going to get getting the recording here by tomorrow. It'll have the booking link as well. It'll have the buyer stuff for you guys too. Like we said, if you book that call with us, we're not expecting you to, be absolutely ready to buy today, right? We want to make sure that you're on the right track so that when you are ready, you're not scrambling at that point and then you're delayed a little bit longer. We've had so many people that decided to wait and they realized they weren't doing something quite properly, I guess is the way to say it. And then they had to wait a few more months. So we'd rather just avoid that. And so when you're ready, we're ready essentially. So book a call with us like a lot have already. We're happy to have those conversations with you guys. I look forward to it. But if there's no more questions, I would say we could probably wrap this up for you guys. I think
Yeah,
we're
I think we're good. Yeah, thank you so much for joining us, guys. As Andy mentioned, if you're ready to go now, perfect. We're ready to go as well. If you want to wait till the spring, we'll make sure that we do have a good review of all your stuff. Make sure that all of our ducks are in a row, make sure that everything lines up and is ready. And if we do have to deal with something that, might take some time, that we can deal with that now instead of, right as you're ready to go, finding out that maybe your down payment isn't ready or your credit isn't good enough, something like that. We can check that now. So sometimes going through that process right away today, even if you're planning on buying in the spring, is always a good exercise because we can uncover some stuff that maybe we can get set the right path in place to get you on that home buying journey for the spring as well. So book on that booking link, and we'd love to hear from you. But yeah, if there are no more questions, thank you so much for joining us, guys. We look forward to walking hand in hand with you all the way through this journey and being your team all the way through this big milestone event for you and your family. We love being a part of your journey.
awesome. Again, thank you, Ryan, for this as well. Thank you guys for sticking around with us, and we appreciate it. But on that note, you guys enjoy your Wednesday evening, enjoy your weekend, and we'll talk later on. Thank you.
Take care, guys.
Yeah.